Swing full week for US crude WTI, higher highs and lower lows getting created on the weekly charts. And now what to expect? Is it going to go green from here or is it going to get doomed? Which position you should take next week in order to profit? We will see with the help of charts first, followed with indicators, and towards the end I will give you the trading levels and strategy for next week. Do watch till the end. Do not forget to like, share, subscribe and comment, and do not forget to press the bell icon which will keep you updated with the daily targets which I share very early in the day with the Asia session. Let's start. Now let's start with something with a very little distant observation, and here you can find since this time in 2021 US crude has been trading in this expanding triangle, and so far you can find out the bottom is here somewhere at around $68 levels of this channel. We can see multiple candles getting rejected at those levels. This is one part of the observation. At the same, in the near term charts we can find out since last multiple weeks crude oil has been trading in this channel, and now the highs of this channel you can first find 92.5 at the strongest resistance at the highs of this channel somewhere here at around 88 to 90, which is going to give it a very stronger resistance, and hence this is conclusive that any point of time if you see crude oil trading above 92.5, certainly that is going to be a good level for you to stay long. At the same time, now look at this. See, it is trying to trade in this channel. First observation. Second observation here on the weekly charts is, let me show you detail here. Now we saw that the bottom of the previous channel was somewhere here at around this zone, that is 68 to 71 observation. At the same time we can find out that the slope is changing in the last few weeks. We can see the lower lows are getting a little bit change in slope we had seen, and hence the bearish momentum has definitely diminished from what we had seen in the previous weeks. So this is second observation. Now coming to the weekly chart, so yes, if you see it opening above the zone and trading above 82 levels, see 82 is going to be a good resistance. Beyond that you can say that possibly we are looking at 84, which is going to be the next stronger resistance. And any point of time crude trading above 85, see this multiple candles getting the support at around 85. If you see crude trading above 85, you can remain certain that you are looking for another round of good rise which may try to bring it for this zone, that is 88, 90, and then plus levels also can be seen. At the same time opening flat and taking a negative direction. And also another observation, higher highs lower lows, the pivot here is right now at 78, and if it drops below 78, certainly we may see it pulling back till towards 76.5, and then below that it can show you another round of good drop taking it till towards 70 and 68 zone, which is going to be an important support zone. See, three red candles, a retracement, and if it gets a pullback here on the downside, definitely we are looking forward to 68-70 zone. So 78 is the pivot, below which certainly more bearishness. So in between this zone, that is 78 to 82, what to do, we'll see further into different charts. Let's have a look at the daily charts now. Now look at the daily charts here. On the daily charts, see, let's observe daily charts from somewhere here. There was a base, top, retracement, double top, and after the double top, lower lows are getting created. Now lower lows means there is certainly a bearishness which it has shown. Now this time it has retraced and further highs are done from the last week, and you can see these two candles and these two candles are almost reflective of something, that there is a downward pull which it is trying to pull back on the downside. Now if you see it trading below 80, certainly see this zone at 79.7 if or 79.5, you can count below that, you can certainly expect 79, 78 levels are going to provide support. And if it drops below, certainly you can expect that it is going to create the symmetry out of this move. This is the vertex, and from here it is trying to take it downwards, and hence it concludes that possibly once you see it trading below 79.5, you can initiate a short entry, expect 78 as the major support, and then 76.5, 75, and then below that a good crash can be expected, which might take the support at 74. Below that you can stay short further for 70 to 70 levels. For in next, not only next week but next couple of weeks or the month of December, we may see it getting pulled back if it breaks below on the downside. At the same time, now just observe the last two candles, how to consider a reversal and which point we should enter. See, now you can find out lower highs lower lows are getting created, and that is why I say 82 is certainly is going to be a level beyond which it will confirm that it is trying to reverse and break the trend which it has seen for last couple of candles, and it is going to rise, and hence 82 certainly is going to be a safer level for you to enter into a bullish position. Now this is just on the daily charts. Let's have a look at the monthly charts. Also before we proceed, let's have another round of look on the daily charts. See, drop, retracement and now trying to reclaim the downward move again, and hence this time if it drops, this time it can give you sharper drop. You should be careful of this, that retracement is done. Now it is following with red candle, and hence this red candles can be sharp enough for it to take it towards further lows, and hence you should be cautious of this. Now coming back to the monthly chart. Now look at the monthly charts. Previous two candles, flat top at 92.5, body size a little bit bigger and engulfing the previous candle, and lower lows from what we had seen earlier. So see, this is almost sandwiched here. Now it is trying to take a direction, and see this, it has already formed a wick out there, and with the wick in place it is trying to gain a direction. Now see, certainly below 79.5 you can expect a little drop for 78, but below that you can see it dropping further, which might in fact this time pull it further down. The support zone is here. You can see multiple candles getting supported here at 68.70, and the maximum support zone, if it continues to drop, is at $60 levels. Now if you connect the dots here, you'll find that almost the zone here is going to be important at 68.70 first support zone, and then 70 to 74 is obviously there. So be careful of these levels. Now we have seen the charts. Let's have a look with the help of indicators. What are the indicators are suggesting, and then we'll conclude with the levels. You can find out on the daily charts that the 20 period and 50 period crossover has happened. This is divergent, indicating this is bearish. Also the 150 period moving average are still divergent, but now we have observed last trading session that the 20 period moving average certainly giving it a push on the downside and keeping it below these levels, and hence these levels becomes important, which is precisely situated at around 81.5, 82 levels, which also becomes an important level that trading above which you can expect little more bullishness, and then this convergence can happen and it may try to trade bullish from here. It is trading at the comfortable zone. It is trading, see, this was the bottom of the Bollinger Bands, and we had seen the retracement. Now again the bottom is there at 74. So yes, even if it tries to drop these levels, certainly may provide a good support. Now look at the directional movement was so far bearish. It is narrowed here, and if it tries to diverge from here, that's something we should look forward to, else it can converge crossover and continue with the bullish momentum. That is why I said any move above 82 certainly be a good indication for you to confirm the bullishness. Now look at the stochastic. It was trading near to the bottom. It has again reached the overbought levels and now trying to converge crossover. See the green line crossing over here, which is what we had seen here, and then the downtrend has followed, and possibly this indicates that we may see a little drop from here, possibly. But there is another observation on the MACD. This is important observation. Now see, mixed indication we are getting right now on the daily charts. You can find out, see this crossover has happened at the bottom here at minus 200 levels, and see this is just second green candle here, and this is also divergent, indicates that increasing in body size here, and this is the second green candle. Possibility exists that if it gives you couple or more green candles taking it above 82, you can expect that it is trying to trade bullish from here. But at the same time, look at this zone where it has crossed over earlier, couple of green candles, and then dropped sharply. Hence you need to be observant in between the zone, that is 78 to 82. We have to let it take a direction before taking a position. RSI is trying to converge and trying to look downwards. Now look at the weekly charts here. On the weekly charts, the 100 period moving average at around 82 giving it a good push on the downside. The 20 period and 50 period moving average are situated somewhere here at around 88, 90, and then over and above these levels, and hence you should be cautious of these levels. Possibly if it tries to attempt in a trade bullish, it may try to regain those levels, but at the same time look how we had seen this performing. See drop, you can clearly see slight bearishness, and if it breaks on the downside, this can bring you sharper momentum, and hence we have to remain cautious here. Directional movement moderately bearish, stochastic trading at the bottom, and this was the time when it is seen a sharp dip and traded at the bottom for a little while. Likewise, you can see the sharp dip, and then it may sustain this bearishness also for a little while. The MACD is divergent and bearish here, but look at the candle size on the weekly charts. And if you look at the candle size here, see it is diminished here. See it is trying to converge here, and hence let's be observant a little in between the zones or the levels which I had mentioned. RSI is trying to look upwards from here. Looking at the monthly charts, on the monthly charts you can find out the 20 months average is little far away at around 85, 86 zone, and now On the downside, the 50 and 100 period moving average are situated at around $60, $65 levels. This zone between 60 and 70 is going to be very, very important if it tries to attempt and go till towards those levels at all. And if you look at the monthly charts here, you will find the directional movement so far was bullish and finally it has converged here. There could be a possibility that it can show you a crossover, and this makes us a little bit more conscious. But at the same time, look at the stochastic. It traded overbought for months. Now for the first time it has come back to an oversold zone and it is trying to sustain this oversold zone for the little while. But at the same time, one must observe that the stochastic has started looking upwards. There is a crossover here, and possibly if it is continues with the bullish momentum in this month, it can try to regain a little comfortable levels. And in the history, if you see on the monthly charts, whenever oil is seen an oversold level, it has shown a sharper recovery. Only this was the time in 2015 when it has taken a little bit of time for it to recover, and this makes us observant of the fact that since it is oversold, a little bit of recovery is must. However, at what point we need to be watchful of. It can take a dip sharp on the downside before trying to recover. Now, another important observation on the MACD, on the monthly charts, it is divergent. See the divergence here, these two are divergent, and see it is happening at the peak point, and this point is achieved after months here, and hence there is a probability that it can show you a little bit of highs, it can show you a little bit of pain before it tries to rise again. This indicates that there could be a downward pressure in oil for the coming months. In my understanding, $60 level should certainly be supportive of it, but however it appears that right now it is looking downwards, it is divergent. On monthly charts we may still see a red candle, and only bullish confirmation is above 92.5. You need to remember this fact, only bullish confirmation is above 92.5, because beyond that then you can expect that it may try to form double top here before looking forward to a drop. The RSI is also looking downwards. It was extremely overbought, but we had seen earlier whenever it has seen the overbought levels, it is followed with a good drop, and that is why we are looking forward to this drop now. So we have seen the charts and indicators. Time for us to conclude, and before I provide you the levels, yes, if you want to learn this art and strategy and tools for you to trade profitably, if you want to learn this art, you should join my mentorship batch. The 18th batch is going to start on the first week of January. Be a part of it and become a profitable and proficient trader. Trade with confidence. Also, you can be part of my signals group where trading as per the signals, definitely you can benefit. Now look, right now it is at 80.32 or 80.4 levels where oil has closed. I will recommend you to take a buy position at 81.2. Expect 82 levels as the good resistance. This is going to be a very good resistance, and then 82.4. Now if these two levels it sustains, 82 and 82.4, just straightforward stay long for 83.5 and 84 levels, and beyond 84 then the next move is going to see 85 is another resistance, but beyond that directly we may see it hitting 87.5, 89.2, and then it may try to breach 90 also. But the possibility of it is something we should observe a little. First it has to sustain above this zone 82 and 82.4, and beyond that 82, 84, 85 levels is something you should observe a little. Beyond that, certainly good bullish momentum to be seen. Till the time not a bullish confirmation, not a reversal confirmation, till the time oil trades below 92.5, do not confirm for a bullish reversal which might bring it for 100-120 levels. On the downside, where to go short, you can sell there at 79.4 levels. Below that, yes, 79.2, very nearby, but yes, a good support level. Hardly you will get 20 cents, but still a profit is a profit. Below 79.42 you can expect 78.5 and 78. Now this is the next stronger support level. If and only if oil breaks below 78, you can confirm that there could be further bearishness which might bring it for 76.5, 75.2, and then below that 74 levels. These are going to be important for oil. 74 levels, which is also the previous bottom, which is going to provide a good support. Below that you can expect 72.7 and 71.2 again, and then $70 levels very sooner or later, and hence you have to exercise extra caution while taking a position. Only below 78, yes, that should be the level below which a little more bearishness can be confirmed, but then 76.5, 74 levels should come into picture as a good support level. Below that 72 levels cannot be denied. Take your positions accordingly, trade with a stop loss, trade with a trailing stop loss, and remember, at every milestone you have to keep closing your positions and re-enter such that you can take the benefit of the move. Else keep shifting your stop loss to your entry price and then to the target price first. If you see it hitting first target price, you can shift your stop loss to this target and keep continuing with the trade. Else book 50%, continue with the rest 50%, else close 100% and re-enter at a lower level. So take your trades accordingly, trade with the stop loss, trade with the trailing stop loss, join my mentorship batch, join my signals group. Thank you very much. Have a great profitable trading week ahead. Also, you can my telegram and email IDs where you can connect with me are mentioned in the channel and video description. Thank you very much. Reach out to me for details. Thank you.